let's put the spotlight then on Spandana, Sphoorty and Shalabh Saxena as the MD and CEO now joining in on the show. Thank you so much for taking time out and appreciate your patience. To begin with, I'm just looking at your numbers and basis what you've delivered. It's visible that you're managing to grow customers very aggressively, 77% on a sequential basis. What exactly is driving this growth? What's changed over the last couple of quarters?
So good morning to all your viewers, and thank you for inviting me. To answer your question, there are two things. The first is there's a base effect, so that has to be looked at in context. Number one. Number two, as a strategy, when we came up with our Vision 2025 document, where we said this is where we want to take the company to at a 18,000 crore level from the current 7,000 crore. We had articulated a higher customer acquisition in the overall scheme of things for two reasons. One is these are customers who have crossed through relatively nicely in the COVID period. That's number one. Number two is they go through the entire CV checks, etc. So our customer portfolio needed some bit of a churn. So that's the reason why we kind of very clearly said that directionally we will acquire more customers, and that's the reason about 46% of the loans over the past 2 quarters have been going to the new customers. So it's a part of our strategy, and it is playing out the way we had envisioned.
So do you think that this momentum can continue going forward? Do you have any targets when it comes to your member additions?
Yes, so it will taper off for sure, but it wouldn't still be at a number anywhere between 35 to 40% will still continue for the next 3 to 4 quarters. Number one. Number two is our target is very clear. By end of FY25, we will have about 4 million customers. We are at 2.3 million at this point in time. We are on track, and I think we should be able to deliver.
Your disbursement guidance for fourth quarter stands at 3,500 crore rupees. Is there a target that you have for the full year as well as FY25 too?
No, so this year when we end the year, for a disbursement of anywhere between 3,000 to 3,500, we should end at a portfolio of upwards of 8,000 crores. So we have once again going back to the strategy that we had carved out. We should end this year roughly at the number that I said. Next year will be around 11,000 plus, and then 15,000 on the microfinance book end of FY25. So we have about 8.5 quarters to deliver a 15,000 crore microfinance book, and there are two new businesses that we've articulated, which is the nano MSME and the housing, affordable housing. That is another 3,000 crores on top of 15,000 crores. So that's the articulation, and I think we are taking all the steps to ensure that we walk that path and deliver.
Sure. So, but along with that, can one assume that you're also comfortable with the risk that you're taking? I mean, wanted to understand what your guidance or target is with regard to credit costs, for instance.
Yeah, so that's a very, very important question. Any growth minus risk or minus quality, it does not mean anything. And as a management team over the past 3 quarters, that's what we've been focusing on. Our numbers are there. We are in control of the portfolio, and I think it will further improve over the next 2 to 3 quarters. That's number one. Number two, any microfinance company, if it is able to, it should deliver a 1.2% loss rates. That's the current trend. And if it delivers that, then I think, it should be good. As far as our P&L, etc. is concerned, we budgeted higher. We budgeted a 2% for all the financials that we've given. So, we're just cushioning it, but I think we should be around that number that I said.
Okay, and your net interest margins as well have risen to nearly 14%. What's the outlook and what will be your levers for expanding your net interest margins?
So we are at about 13.5. So any number around 13.5, 13.7 is a good number on a sustainable basis. So so I think we will hold on to it. The yields are at about 21% at this point in time, but over the past 2-3 quarters, we've been as a company at about 25% because of the rising interest rate scenario. So the portfolio yield over the next 2-3 quarters should inch up to anywhere between 23 to 23.5%. On the quality of portfolio perspective, we will have a lot of because the new book that is being sourced is fairly, fairly pure. So from that point of view, that will further add to the delta of the profitability. So on the NIMs and yields, I think, a 13.5, 13.75 should be good enough on a sustainable basis. Yields would probably go up by maybe about 2% from the current levels because of the shift in portfolio.
Okay. You're also planning advanced branch opening as well, so costs will remain elevated, I'm guessing, in the near term, wouldn't they? And if you
Yeah.
could give us a guidance on how should one look at the ROAs then in the near term?
Yeah, so it's a fair point. This is all growth investment which is coming in. In fact, we were reasonably happy with the progress that we were making in spite of a very clearly articulated strategy for the next 3 years. So looking at the movement and the positive movement, if I may say, what we've done is we've preponed opening about 200 branches, which we were otherwise planning in Q1 of next year. We kind of were getting almost about 100 branches this quarter, and then we'll have the balance in the beginning of the Q1. So that's just an indication because microfinance and even large distributions, we have about 1,200 branches. We are targeting a 1,500 branches by end of FY25. But in all likelihood, we'll open all the balance 400, 500 odd branches in the next 3 quarters of so that we have a clear runway. All the 1,500 branches have a clear runway in the FY25 of all 12 months. So that's the clear that's a clear indication of the reasonable progress that we are making as a company. So to that extent, we have also articulated that there are 7 states where we are going to increase our presence, because right now we have a marginal market share there. So those states are the states where we are kind of adding all the new branches.
So do you see a substantial change in your loan book as the current growth guidance starts to kick in?
Yes. So one of the fundamentals of a microfinance is how well you manage risk, and a very key element of risk is concentration risk. So this is a step in that direction. Once we spread out our distribution across all the 21 states, we are currently present in 18 states, but the 7 states we have a marginal presence. So once we do that, we'll be able to balance our portfolio geographically across the country, and that kind of will ensure that we are fairly well balanced across the country. As a incident here and there in a particular state should not really upset the portfolio of the company, and that's our motive.
Appreciate your time. Thank you so much for joining in and giving us a view on your growth outlook. So acknowledging that, yes, as of now, there could be a mild blip, but the company is definitely working towards improving their overall operational metrics.